we got something cooking here. We might have an opportunity to make a little trade. This guy is 48 pips in the money on a Monday morning. So, you know what we do? We trim that stinking hedge. So let's do some math. 48. And if I'm going to put a 10 pip trailing stop on it, then we would be 37 pips in the money for our amount to calculate our trim. And this guy is out of the money 269. So let's put minus 269 right there. So that has us trimming him 684 units. So first order of business, let's put a trailing stop on this guy for 10 pips. Put that in there for a modified order. And then we are going to partially close. Look at that guy working. He's already going up. We're going to close 684 units off of this. Boom. Okay, so now if and when, it's not really if, it's more when we come back and hit this trailing stop, then what we're going to do is work out our bracket order and trade the pullback. But for now, what we're hoping is this just continues to climb his way up. Every little inch he pulls that trailing stop is just fancy old clean pips right there. All right, so this guy is starting to pull back now. We've had a pretty good run. We've picked up a bunch on this trailing stop, but we're about 5 pips away. So I'm going to start setting up our reverse scalp, if you will. So if it comes back and hits that stop, I'm going to sell 2,410 units. And I'm going to put a 10 pip take profit on that. So that's what that setup will look like. And then if it didn't work out, we would put a 30 pip backstop. I'm not going to put the backstop on just yet until this hits. And if it doesn't hit and this continues to move on, then we'll just move this up and continue to reset that sell stop. But if this comes down and hits it, we're 3 pips away here, then what we'll do is we'll automatically pick up this sell stop with the 10 pip take profit. All right, just to recap, we do have this trailing stop and it has moved quite a bit. We're 55 pips in the money, so it would come back. What are we, about 4 pips away? So we'd end up making about 50 pips on this position. If it comes back and hits it, then that's when we will trigger this sell stop at the same price. See how this price, 1.37710, is the same price as this stop order, or the trailing stop at 1.37710. So if it comes back and hits that, then what we're hoping or anticipating some continuation to the downside on this pullback for a 10 pip take profit. And then if we hit this take profit, then what we would do is balance our hedge with a buy limit order of 4,289, 7 units. If we're wrong and it doesn't quite hit this take profit and it moves back up along its way, then we would balance our hedge 30 pips up for a 6,699 unit position. There we go. Okay, so now we finally hit our stop order and it instantly activated the sell order, which we're looking for a 10 pip profit on this. Okay, so if that happens, then what we'll want to do is balance our hedge with a buy limit order of 4,289 units. And we're going to put that at the same price as this take profit order. So 1.37610. And that will be for 4,289 units. All right, so that is the bottom side of our bracket order. Now, if we're wrong, we need to go 30 pips above the position, so not 10 pips below. So right here for our buy stop, and that would be 810. Okay, so that now becomes our bracket order. If it goes up, we'll pick this up and balance it, but we're giving it some breathing room, and we're hoping that this continues to have some pressure right here and come back down to pick up our position on the lower side. Whew. And just like that, I got all cleaned up and looking like, right? I took a shower, did my hair, came back, and we are now experiencing our pullback. So this position that we sold is 8.5 pips in the money. We're looking for a 10 pip take profit. If that happens, we'll trigger this buy limit over here, and then we will have a balanced hedge. We can walk away. We'll get rid of this buy stop, and then we can walk away. All right, 9.7 pips. Is this bad boy going to hit? It's getting close, really close. Should be really fun. That'd be a wrap up. 9, 9, 10. Boom. Okay, so we had our trailing stop. It ran up. We picked up some clean pips. Then we sold and it came down. We took a 10 pip take profit on those units on an unbalanced hedge. When it hit our take profit, we balanced our hedge with 4,289 units. And now we can get rid of this buy stop order. So let's cancel him and then redo our calculator. So instead of 4,973 units on this position, it's now 4,289. And on our short side, we have 3 positions still, 46.69, 31.29, and this position is now 22.92. I think it's that time again, time where we hop in to the comment section. I know this is everyone's favorite part. This is the only reason you're here even watching the videos is for the comment section. I get it. It's fun. One person wrote, I tested your system and noticed that its range goes big after some trades when lot sizes are small already. The total sum of closing the hedge at take profit and closing only 0.01 lot of the original position is a negative sum. Do you accept those losses or how do you manage that? So you can do one of two things. You can accept those losses and still make that trim, or you can scalp it and stack up a couple of profits in a row, maybe get like 2 or 3 profits and then go make a trim. So it's a little bit up to you. That's a little bit more of a hands-on, and you'd have to keep track of your profits, but you could stack the profits a little bit so you didn't have to take the hard loss if you didn't want to. All right, one person wrote, hey, thanks for the knowledge you're spreading. Quick question, how do you deal with multiple positions psychological wise? Doesn't it affect your decision-making process? I found out that hedging a position is good and fun process, but once I get too many positions, that gets ugly for me. So that's true, and I think that's probably something that you get used to over time. The way I would always phrase it, or the analogy I use, is when you're brand new on a job, everything seems like it's coming at you really fast. And then eventually you get really good at your job and you can take on more tasks, or as things start coming at you really fast, it's no big deal. I'm guessing you're still fairly new to hedging. And so when you get multiple positions, it starts to become overwhelming. And if that's the case, you can always just trim to balance your hedge, and then you're not adding new positions past the amount of positions you're comfortable trading. As for me, I'm kind of the point now where I don't mind having many positions, 8, 10, 12 on each side. And to me, it's like having little mini franchises spread out throughout the country that I'm managing. And as they come into profit zone, I'll take a profit from that franchise and work my hedge. So I have multiple profit units out there. So I think for me, psychological, I'm really just working the position that's at the money. One person wrote, can I know why you just trade USD CAD pair? So a couple reasons. I like the movement on it. It seems like it does move, that you can get 20, 30, 40 pip movement on a daily basis. So oftentimes you have positions that do come into play. The second thing is from a cost perspective. So this is your cost to buy into the positions. The USD CAD is one of the cheaper ones for me. So I can have more units versus having smaller positions. Um, so that would be a second reason. Its cost per unit is lower than like the GBP or the euro, and the movement is good movement, but not erratic that you can't control yourself on it. Also, I think over time, if you get really good at one pair, you start to kind of feel it. Get a little bit of a dance, and as the market starts moving, you're like, oh, yeah, I know where you're going with that. I know where you're headed. I know what the two step is here. And you start dancing with the pair. If you have a whole bunch of pairs, I don't know, you're not really, getting familiar with that pair. That's weird, huh?